2009 yearly change did right here. Our system is very sophisticated because we get inside of each number to find out where the true value of the market is. Okay? And here is the U.S. Major averages right here. Okay? So basically, that's the closing data at the end of last year, and we're into 6 months of the year now. All right? And I'm going to talk about that part of it as well. We will be doing a more thorough, much more thorough follow-up using the table here and what that means being involved in all markets around the world. Not just your U.S. market, but what we want to do is make sure that you're focused in on global markets and who's having problems and things like that around the world. And that's what this is all about, is to let you know that there's a lot of money made. We've gone through the pendulum swings. We had the big 2008 move and the 2009 yearly up move, both of which we have recorded, by the way. They were very nice periods of time. And basically what I am going to do is go into the chart of the Dow related to the global indexes and U.S. major averages. But, you know, here's the Dow right here, this column. And we can see what the point changes were, the percent changes, all the numbers are here. Same thing on your VIX and your VXN. That's the fear indicators, and that's what's, you know, you've seen a lot of that since we called the market top. If you go to stockmarketpending.com, find it kind of pleasing for you to see there that during that Saturday training session at SMF with our students on Saturday, we did that whole 2,000 put trade on the NASDAQ 100, paid a huge amount of money, right along with the 1,950 put as well, and then there was some S&P 1210 puts and things like that. But nonetheless, what you're going to learn in the special segment of what all of this really means, and I'm not going to go into that part of the tape, but I will tell you that it's specifically related to global versus home. And the performance that you will learn here is that SMF has content for you. And part of learning this, we have markets that start in 1825 and go all the way up to the 2000 bear market with all the content, and it has emerging market data in it as well. And you can see the similarities of how time again has repeated itself, except this time it's much different. And there's another big drop in these numbers that will come. We called the last one, and we very well could put in the 52-week high, because part of our forecast last year around the November-December period is that we put in the 52-week high on or before June 1, and we did it. So Stock Market Funding was very correct in that, and those videos are on there. So basically, I'm going to bring that down, and I'm going to show right now the weekly Dow. And this is a weekly Dow chart. There are 30 stocks in it. A lot of people, if you don't know what Dow means, go to our university on our website down at the bottom, it'll say SMF Stock University. Click on the link. You'll find out everything you need there. You have all the content to understand everything. Weekly chart. 1, 2, 3. I've got 4 weeks closing below the SMF declining 10-week moving average. Therefore, the SMF qualifier during this particular 1 week, 2 week, 3rd week, this is the 4th week. The 5th week was that big down week. That's that capitulation day that created that in that weekly cycle right here. I will be happy to announce to you, though, that what has held it up on the attempted low is the rising 50-week simple moving average. And look at the haircut that we took here. We called the top We were short on our website. We do have the short that we did up here down to the 1040 mark. This was January trade. Notice though that on the index here, you come down, there's the body of the low right there. But let me tell you something. This was a short that we did, and we did right, but we called the bottom here, and we met the SMF qualifier. Once we were above here to hold support, which we have now breached this bar. If I can get it straight across here, or close enough. There you go. So basically, that was that move. But look at the big drop. The downside was much more rapid. Dollar price movement down, taking out stock market orders. Electronic orders was going wacky in this phase. Getting, stock market orders were not favorable that day. So that was a capitulation week. But here's my point. Look at the depth of the reversal. That's the first reversal of 2010. This is the second one. You're putting in a bottom down here where that weekly part of the base was with the SMF weekly gap bar holding half of the SMF weekly bar to the breakout reversal top right here. This is that top. And they slid the bid. Right there was that high of that bar. And this is a very long bar right here. And they all add up because you can see this one here was huge. The high 177.67, and the low that day 69.62. They really dropped this side of the market. Let me show you what side of the market that I'm talking about. Looks like your 270 puts going up in value, sir. Another thing I would like to point out, to people here that 50-week moving average has been doing its toll. I will tell people, though, to sell up here when the markets were making their move in this point, in this area, in this area. I've got the videos to prove it. I told in the video to the public, I said, look, do yourself a favor, sell into the move. And you had time to get out. Don't worry if it wanted to go a little bit higher or not, but to sell in the move. Especially if you had a IRA or 401k and you're already limited and restricted by the government on what you can do with your own money to start with. It's not like here at SMF where people have the free will to trade the up move and the down move and be taught how to make a lot of daily income. No. Anyway, what I really want people to understand on this